Good morning, everyone. Today we are looking at the Daily Bread provided by Harvested Financial. So thank you to all the new viewers that are tuning in today. We're here every morning, 8:35 Central, 9:35 Eastern, to talk about the markets, to talk about what's going on, and look at some option play setups. Harvested Financial manages option strategies for individuals. We set up individual brokerage accounts and execute systematic option strategies on your behalf. No worries about rebalancing, rolling, expiration, none of that concern. That's all on us. We're your guy. So today I am looking at the markets, and S&P futures look up about 26 points today, almost 27 points. NASDAQ futures are up 52, 53 points this morning. Overall macro news, what we're looking at, there's the fact that Trump has officially endorsed the General Services Administration to continue the Biden transition. Wall Street likes certainty. We like the idea of potential, less calamity over the next 2 months. So the fact that transition makes investors more comfortable, we're seeing some rallying on that news potentially. The other major talking point that we've been talking about for a long time has been the vaccines. Oxford and AstraZeneca came out. They're seeing success in their trials too. So between vaccines and electoral certainty, the markets like that, and we are seeing some buoyancy. There's also the structural factor, and that's something that I've talked a lot about here regularly, is the idea of overnight action and generally some of the calendar effects and dealer effects on the markets. In many ways, this is this sort of derivatives tail wagging the equity markets dog, but overnight action tends to dominate a lot of the future flows. If you look back over the last couple of years, that most of the returns are actually coming in this overnight action. And there's a lot of speculation that comes from people front-running expected dealer flows. So to the extent that volatility is creeping in, we've been slowly transitioning or bumping against the floor of this, high volatility environment, trying to get down to, back to where we were at the beginning of the year. As that happens, we are going to see dealer flows potentially push the market up. So one of the speculations is that the overnight action tends to front run that and buy ahead of the US market. So a little bit unclear there. We also know the calendar has a big effect. Everyone's got Turkey on their mind this week. It's Tuesday. That's not until Thursday, but we're already starting to see lower volumes. We know Friday the markets will be open, but that'll be a particularly slow day. So a lot going on macro-wise today, even for a relatively slow Thanksgiving week. But one name I want to dip into is going to be Best Buy. And actually, I forgot one major macro theme out there that I wanted to touch on real briefly, and that's Bitcoin. It's impossible to talk about the macro environment right now without mentioning what's going on with Bitcoin. So trading over 19,000, I think it was 19,250 when I checked just now. So the rally that's happened in the last couple of days has been outstanding. And as an options person, what I can't wait is for the SEC to approve a Bitcoin ETF. The last time this really got some traction was in 2017 when we were seeing similar moves, similar prices for the currency. So we're hoping that really gets some action, because once the SEC is able to approve a Bitcoin ETF, that makes trading options on that Bitcoin product and price so much easier. We're able to create structured products. We're able to design option strategy solutions that take advantage of the volatility, that take advantage of direction, that will do all of the things we do with equities on a Bitcoin-like profile. So really hoping the SEC can figure out a way to get this crypto in an ETF, because that greatly increases the potential distribution and the ease of strategies that fit right in with the rest of your portfolio. So fingers crossed that can happen. We're seeing a lot of interest in that. So let's see what comes out of that. Best Buy was the name that I wanted to talk about. And so they reported some numbers this morning. So pulling up their earnings numbers, same store sales grew by 23%. Online sales grew by 174%. No surprise in this sort of quarter. But stock is trading down right now. So stock's trading down to 113. That's down almost $8.50, $9 compared to yesterday. And why is that? It's because of their future outlook. So pandemic related, once again, not exactly certain how they're going to continue to generate these numbers and what the holiday is really going to look like for them. So a lot of uncertainty for Best Buy. They've been doing pretty well during the whole pandemic, and that's what those numbers that they reported indicate, because people are going there for nearly everything. But I want to start thinking about how we can play this in the option space. So I'm going to share my screen and show you a trade setup that I'm looking at in Best Buy right now. So, I'll pull up my TradeHawk. This is Tradier's trading application that we use here at Harvested Financial. It's actually fantastic for modeling all kinds of what if scenarios, generally understanding sort of what our P&L will look like across different dimensions. So I'm going to put on a flavor of what we do here sort of in the protect strategy at Harvested Financial. And it takes advantage of two distinct things. One is it's definitely going to be a short volatility trade. We're going to capture some of that volatility premium. To the extent that there's still some additional earnings premium in there, we'll be able to capture that. But we also get a little bit of a directional bias with this name. So, we want to take advantage of being both short volatility and short deltas, and short the name looking for a bearish direction. So what I'm going to do here is I'll walk through it. I'm going to go out to Jan 15. So I'm looking at the Jan 15 options. And let me just pull up my little pen right here. So looking at the Jan 15, that's 52 days to expiration. Implied vol is around 35. Historical vol recently has only been trading in the low 20s, but with a move like this, that number is certainly going to jump up. So going 52 days out, post-holiday expiration, 35 vol. What can we do with Best Buy? So I'm going to set up a little bit of a structure that allows us to, like I said, capture that volatility while protecting ourselves. Risk managed trading is really important to us here at Harvested Financial. So I'm going to sell 2 of the 110s. I'm going to buy 1 of the 120s. And I'm also going to buy 1 of the 105s. So this looks a lot like a sort of broken wing butterfly. And this allows us to collect a credit on the trade. So, I'm looking at a midpoint on this trade of around 135 right now. If I want to go all the way across the market, it'd be a nickel. To join the bid side on that trade, it'd be over $2. So we're looking at pretty wide markets. It looks like 70 cents in the 110s, 80 cents in the 105s, and 30 cents there. So if you had 80, 70, and 30, that's going to be 180. So, you almost have a $2 wide market in this spread overall. So navigating in between there is going to be really important. Placing orders on spread books really helps. Posting mid-market liquidity. Potentially there are some offsets here, especially in a really active post-earnings type situation. So navigating that midpoint execution is really important when you're going to trade a wide name like this. So assuming I can get off for around that 140 value, what does my overall risk profile look like? So I'm going to pull up this fun what if calculator, expand my screen a little bit more. And you can see a couple things on here. Now, regular viewers will recognize we really like this structure. We really like this sort of broken wing, modify structure because it allows us to get that max gain, from that volatility premium. If stock closes right there around that 110 level where we're short, we're going to see that maximum gain, and that's going to be almost $600 per contract in this structure. Our max loss is a little over $350. To the extent that Best Buy rallies, that we go over this 118 level, we're going to start losing up to our max loss of 352. Remember, I said capping that max loss is really important. So anywhere over that 120 level, all the way out, we're only going to see our defined risk loss there. We do best, like I mentioned, if it just pulls down a little bit down to this 110 level. That would be a couple bucks off where we are currently. But then even if we don't hit this sweet spot drifting down, we do see a lot of bear yield here. And so I call this bear yield because that's that whole dimension that all the way out here, anywhere below 106, we are going to make that $150, $148. And that'll actually be pretty much, or it will be exactly the credit that you take in on that trade. So that's why that execution matters so much. Because if you can get that 150 price, every dime you get there, whether you sell it at 150, 160, 140, or 130, that's going to be what your ultimate bear yield here is all the way on the downside. So the amount you take in at trade price will very much dictate the ultimate risk reward profile of this trade. So to sort of recap, what we're looking at to take advantage of here in Best Buy is a slight downside move. Stock goes down a couple bucks. We, drifts down another $5 between now and January expiration. We really see that sweet spot of $600 a contract. if it continues to drift down, we're totally protected on the downside. And if it does go against us, we're risk managed on the upside. So Best Buy, some interesting action right here. If you think that sales are going to be a little bit of a slump through the holiday season, if you think this trend is going to be against them, consider putting on a type of broken wing butterfly. There are a couple opportunities to manage this over time, and that's exactly what we do at Harvested Financial. So if you want to take a name like this or some of the major names, we can set up custom structures where you benefit from exactly your thesis on this name. Otherwise, we're looking at model portfolios. Like we mentioned in the macro space, there's still a lot of really interesting stuff going on there. There's a lot of bear and bull yield opportunities out there, potentially with some max profits should this market relatively settle down. So we're keeping an eye on the overnight flows. We're keeping an eye on Bitcoin, and take a look at Best Buy. Check us out on our Twitter, harvested_DAFE. Derivatives are for everyone. And join us here every morning on the Daily Bread at 8:35 Central, 9:35 Eastern. Thanks so much, everyone.